Good morning, everyone. Welcome to the Modern Market, where every day we discuss all things to do with the markets. That's the main markets, the stock market, the crypto market, and the oil markets too, and any other market where we can make some or a lot of money on the internet. Load up sessions today. We've got oil moving higher on escalating Middle East tensions. The G7 have responded with the Strategic Petroleum Reserve release, where they're going to increase the numbers. We'll get into those details a little bit today and think through some of the implications. We'll talk Bitcoin holding 67K, gold falling another percent to test 5,000, and calcium poly market explore further funding at $20 billion valuations, according to the Wall Street Journal. So we'll touch on that news, but I think predominantly still the markets are thinking through the consequences of the escalating Middle East tension. So we'll probably spend the majority of time on that today. We've also got the latest on our general market thoughts and price action, anything that we think would be wise to do. I've definitely got some thoughts on that today. So stay tuned for that. I've got Legendary in the co-host seat with me. We are ready to get into it. Just a reminder, friends, before we do, nothing that we say here is financial advice. This market is very, very risky. We do not know anything for sure. So please proceed with caution and exercise your own judgment. With that out of the way, Legendary, it's Monday. It's the 9th of March. How are you doing on this day today?
GM. Surprised by the market action, to be honest. I did expect oil to go up even after it pumped on Friday. It was up 9%, but didn't expect to see it being up 17%. Obviously has cooled off a bit from there, but it did go as high as 110 and $112-ish, and now is sitting or chilling just a touch above $100, which still means it's up 60% on the month, which will definitely be one of the main things to discuss and get into the show. But something else that's been on my mind that I found fascinating that came out over the weekend, and I think it is extremely, extremely relevant, is this here. Let me find my tab. There we go. It's this post by Karpathy, who is obviously one of the most prolific thinkers when it comes to the whole agentic engineering era. Karpathy also being the one who coined the term vibe coding, which everyone is using at the moment. And he released a project that doesn't read very spectacular at first. It's called Auto Research. It's a GitHub, and it says the goal is to engineer agents to make the fastest research progress indefinitely without any of your own involvement. So basically what that means, and why I think it is extremely, extremely significant, is that he built this auto research code where you can run experiments, machine learning experiments, using one single GPU, whether that's an NVIDIA GPU or whether you use a package, someone built a package that is optimized for Apple, so you can use it on the M silicon as well. And you can basically write a prompt, write a MD file, a markdown file that contains a prompt in the project that you're working on. And this thing will run overnight and run experiments and see if there are any improvements happening and basically implement this machine learning progress. So to give one example of how I have been using that, or how I started using it, because it's only a couple of days old, obviously I'm working on this like long-term memory system for AI agents, which I had published. And the challenge here is, okay, what is the best way to cluster memory and then to test against how the agent is recalling that? So I gave this to Auto Research, and now it's running one experiment every 5 minutes. It's trying to structure data in a new way, memories in a new way. It's recalling, testing them. It's seeing, oh, did it get better? Did it get worse? And at the end of the night, I wake up to basically 100 experiments that were running, and I wake up to seeing some improvements that I couldn't have thought of myself. So whenever you have a model or something, or you want to optimize, you would have had a pretty difficult spot to do that machine learning yourself. You would have built a more fragile environment, be part of the testing, adapting, formulate the tests. And all of this is basically now automated. The only thing, and Karpathy put it very beautifully, you have to do is the human iterates on the prompt, the AI agent iterates on the training code. So basically, it is a tool that is now available for everyone to train their own LLMs, to do their own machine learning, to optimize for whatever goals, whatever models you might be building. And if all of that still sounds like very confusing as to what it is or what you're doing, you can basically just take the GitHub, plug it into your Claude code, into your Codex, into your OpenClaw, into any project you're working on, and tell your agent, look at this GitHub, look at auto research, and ask how we could use that for our workflow, what sort of experiments could be done. And very, very likely your agent or your Claudes or codexes will be very excited about that, because it is a pretty significant tool.
That's pretty cool. I think it's really important to stay on top of this stuff as the world's attention span gets shorter and we kind of get pulled around the various conflicts that are going on. I think it's going to be helpful to always just keep on top of this new stuff. And as you said, on the practical level, I think it's very helpful to know that when you're experimenting with this stuff and you're not sure, I've done this as well, maybe on a more simple level, but just ask the agents how to do things. Like, what do you need in order to achieve this thing? Here's some information I've got. How can you integrate this best? Like, you don't need to know even how to integrate it. You just tell the agent to think of a way to do it and explain their thinking to you, so it explains to you. So that is pretty cool. So we're gonna keep staying on top of the latest ways to kind of optimize yourself and your company and whoever you're working with as the developments come out, as well as, you know, stay on top of the markets and the various things going on. I think all this stuff will be interlinked at some point. I'm reading more and more about jobs. The jobs data coming out of the US has been bad. I think we touched on that last week. I think it was 5 out of 6 of the last job data have had downward revisions after. The outlook is pretty poor, I think, at the moment. And I wouldn't be surprised if some of this stuff has something to do with it, even though the administration is very against the idea that that is going to happen. So look, we'll stay on top of it. We'll keep linking it to how it can be useful to you and the broader economy, as well as keeping on top of the markets as well. So that's what we'll get into now, starting with the price action, because we've got some good headlines to talk about today. We've got Bitcoin pretty much flat around 67K. We've got ETH up a couple of percent, just under 2K. We have Sol up a percent as well to $83, and we got Hype up 2% at 31. On the meme coin side of things, we have Doge flat around 9 cents. Pepe is flat as well. We've got Pengu up a percent. Pippin is down 10%, incredibly volatile as always. And we've got Fartcoin down 1%. Tibber is down 7%. Rect is flat as well. So that's what's going on in terms of the pure price action. In terms of the headlines, which we're going to focus on today, we're going to talk oil. Of course, we can't ignore oil today. It's moved a lot higher over the weekend on the escalating Middle East tensions and the increasing strikes on oil facilities. But the G7 has responded with the release of the SPR. We'll talk about what that means and how oil has really cooled off as soon as that was announced just a few hours ago. And all of this action is taking place on Hyperliquid. People's eyes are transfixed on Hyperliquid. The volume is incredible on the HIP-3 markets. So we'll try to get on top of all of that to the best of our ability in today's show, set you up with some of the core information and think through some of the implications. Bitcoin's also holding at around 67K. I'm still kind of surprised in the strength in crypto here. But it has been there as the rest of the markets start to look weak. I do have an inkling that, you know, crypto is front run all of this stuff in some way, but we're kind of seeing to what extent that is true or not. Gold is looking a bit vulnerable here, just above 5K as well, pulled back a touch as people start to consider if gold will need to get sold off as part of increased financing for defense. I know Poland are considering that, as it was reported, I think last week as well, they being one of the countries that have increased their gold exposure a lot, but also know they need to increase their defense exposure a lot. I think that's a type of thinking a lot of countries are going to have to think as they realize that no one is really there to defend them at the moment. So we'll think through that. We'll also talk Calcium Polymarket, explore further funding at $20 billion valuations. Feels like just yesterday they were raising it around 10 or 11 bill. So a bit of a, would I describe it as a bubble? Maybe. a bit of a increasing bubble in the prediction market universe. Getting into the other news that you should be on top of: stablecoin bill passes in Florida to create a framework for payment stablecoin issuers in the state. 21 Shares launches a Polkadot ETF. Tether announces investment into Utexo, a startup facilitating stablecoin settlement on Bitcoin. And finally, Pudgy Penguins preview Pudgy World announcement today. To be honest, in reviewing the news before today's show, it definitely felt like there was less news. I feel like if you were a project or team looking to ship something at the moment, in order to get maximum traction, you don't really want to compete with, an oil field getting blown up and oil ripping 20% over a few days. So I feel like the rest of the news is going to has quieted down a touch in terms of product updates, teams shipping things. I'm sure they're still shipping, but it's certainly been a bit quieter as the headlines are taken over by what's going on in the Middle East. So we'll focus our attention appropriately for those reasons. But before we get into the main stuff today, what's catching your attention here from around the space before, as we said, we're going to focus much more closely on the biggest news of the day, which is obviously the oil price and what's going on there?
Yeah, I have two things, two research pieces that I read over the weekend, which I found quite interesting, which I want to touch on briefly. One of which is revisiting a piece of news which we talked on the show. I can't remember. Was it like one and a half? Was it a couple years ago? No, it was pretty early on in our show life. And remember when I spoke about these Australian scientists were cultivating human neurons in a petri dish and basically taught the neurons how to play Pong as a simple game. The same researcher team has continued working on this, and now the neurons in the petri dish are more advanced and they can play Doom. They can now play a shooter game instead of only being able to play Pong. So basically doing more complex things. That is the one thing I wanted to touch on. And the other thing, which is it's quite similar to a certain extent, also has to do with that, is this news here that reads: a fly has been uploaded. So researchers in 2024 managed to map the entire brain of a fruit fly, which has 140,000 neurons and which has a couple billion connections as well. So it's a relatively simple creature, obviously compared to a human mind. And back then, they were able to use that data to basically predict a fruit fly's behavior after having mapped its brain. And now this advanced more than that, because now they basically managed to like upload that entire brain into a simulation. And what you can see here, which I'm showing on screen, is on the left hand is like basically a fruit fly which has been uploaded to a digital world, or its brain has been uploaded. On the right hand side of the screen, you can see the brain emulation, all of the neurons firing and doing things. And basically, this fly is doing what flies are supposed to do, which is walking around, flying, eating, grooming, and it is the company's goal. The long term goal is to manage to upload the human mind, obviously, which is multiple times more complex. It's such a incredible task because we have such a complex brain and we have obviously all the connections between the individual neurons. But what has been achieved is a digital mind of a fruit fly, which can now live well, not on the blockchain, but it can live on the internet, can live digitally. So that has been some breakthrough research which happened over the weekend, both of which connected to working with minds and brains. One more on what human neurons in a petri dish can do and how they can be trained, and the other one, how can we make progress in uploading ourselves to a digital world.
I mean, it's pretty interesting stuff. Very interesting stuff. I guess this stuff. Are you finding this when you're reading into this stuff? Are you finding that it has practical applications at the moment? Where do people think that the direction this is going?
Well, with Eon, the goal is upload the brain, right? Make yourself immortal by uploading your conscience, uploading your entire brain. And with the neurons, it is the interesting thing is that none of this is trained, right? This fly is not trained. It's not an LLM. It's like its brain just works and does the things that a fly is supposed to do. And the human neurons are also not trained like a traditional LLM when they figured out things, because they're able to learn way faster. So if we scale AI further, at some point, from my understanding, having human like or human brain like structures like these neurons is a way more efficient way to train complex LLMs than what we're doing right now. So I think the practical application is not there just yet for you as an end consumer or customer, but I think both of these research angles are like highly relevant when we are working towards a future where we will have AGI as a part of it.
Interesting. The one point I'd make about this, which is maybe a bit of a sidestep but connected, is I do think we are going into a period of time where the tech entrepreneur has accrued a disproportionate amount of power, political influence, and capital, to the point where they are being trusted with things or entrusted with things and being asked for things which they're actually not. I don't see why they would necessarily be the best people to speak on. And I think this is always a tendency, like as you acquire more capital and as you become more powerful from the capital standpoint, and you build successful things, your opinion is obviously heard better because you are considered to be successful. But I do feel like we are going into a period of time where it's becoming disproportionate. Um, and you've noticed how a lot of these tech people are becoming increasingly influential when it comes to political races, and that was accentuated with, and I think, to be fair, Zuckerberg and various tech entrepreneurs have been involved in politics for quite some time, making donations. But I think Elon's move in the last election cycle was even a step up for the extent to which they're willing to get into politics now. And I just wonder whether a lot of entrusting tech people with a lot of this stuff, I'm just not entirely convinced that it's going to work out well. I know there's an argument that government has been very inefficient, and actually don't disagree with that at all. I think handing over all the keys, like it seems to be happening at the moment, to VCs and tech people, is worrying.
Do you
I
think
don't know.
do you think it's possible to change that course of action? Like thinking how sticking with Elon, like how advanced Elon is with XAI, or even Sam Altman with OpenAI, or Dario with Anthropic, thinking how advanced Elon is with his with SpaceX, where like governments depend on it. Like, is it too late to change this course of action for governments who traditionally are more powerful, like the United States?
I'm not sure. I don't think it is necessarily, but I also don't think. I mean, in the same way, that I don't think you should trust governments. No, I wouldn't necessarily say at all, but I think, government serves an important role. Its role should be uh, limited, defined. It should be narrow in scope. It should know exactly what it needs to do, and that's what it should be there for. In the same, I think that same thing, that same premise should be. My idea about government is not that dissimilar to my idea about anything else. It should be the same set of thinking applied to tech people. Just because they're more productive, I don't think you can necessarily trust them either. And I think all of this stuff around, I don't know, uploading yourself into the simulation or uploading your brain data and this and that, trying to make yourself live forever. I think you've got to really keep a check on tech in general, because I think there's some strange ideas that can percolate out of tech. At least one of those being the effective, what was it called? The effective altruist, which one was it? The effective altruism movement.
Right.
SPF being one of those people where people get so powerful in tech where they just think that whatever they, making money is the main goal because they'll know how to spend it best and they'll be able to do whatever is best for everyone. And that's kind of how government thinks, to be honest. They want to increase their power and scope and capital so that because they know best. And that's kind of no different to some of these, some of these tech people. And so I just think, I don't know, that was my reaction as you're talking about this stuff. I'm not super keen on experimenting in these directions. I don't see the broad benefit for it. And in general, I think I'm a futurist, like a technological, what's it called? Techno-optimist. Like I'm very optimistic about the future and what tech can do. I don't know what the intentions are, some of these people. And I think, and I don't think I'm the only one. For example, with OpenAI, I think many people have become skeptical of OpenAI and Sam Altman and what might be the true intentions of how he operates the business and stuff. I don't know. What do you think about that before we get into the market stuff?
It's such a difficult question. I think I'm very much a tech optimist, and this is going to sound so selfish. Governments obviously move way slower than private entrepreneurs do. And just because I see how the world is very, very quickly changing around me, and I am like still reasonably young, I would argue, I have hopefully decades ahead of me where we can see progress being made in all of these different directions. So for that reason, I selfishly prefer that we are doing these experiments and doing them in a very, very fast way, and that this is not happening in a government controlled way, which ultimately would be slower. And then maybe it would be a generation too old to be able of, I don't know, at some point uploading my mind. So I like the speed. Obviously, there's risks to that, but that's a purely selfish answer to how I'm looking at things.
Fair enough. Yeah, I'm deeply skeptical of the people. I don't think that. I don't think it. You want to. The best system. I think America is a wonderful system that was constructed. I don't think it's working fantastically at the moment, but all of the great systems do have checks and balances in places. And whilst I don't think, I don't know, it's a tough one. I don't think government should be overly involved. I think there should be some, I don't know. It's a hard one. I don't know what the exact answer is, but all I know is that I don't trust some of these people who are running this AI stuff at the moment at all, like at all. And I don't know whether it's just AI. I don't know if it's Palantir as well with whatever AI they're doing on the war side. I don't know whether it's Anduril building all the defense stuff. I think people should be cautious. But look, it's the time to be cautious in general, right? Let's get into the main headline for today. The volatility in the world is increasing. And so the first headline for today is talking about oil going high as Middle East conflict continues. But there is news of this strategic petroleum reserve that's going to increase the number. We'll talk about what that means in just a second. So this is the news that crude oil's historic price spike driven by a sharp escalation in the Iran-Israel conflict, triggered nearly $40 million in liquidations on Hyperliquid's tokenized oil contracts. All of this volume was taking place, or everyone was looking at the Hyperliquid oil market over the weekend. That's where the markets were open to speculate on the price of oil. The surge pushed the price as high as, I think, $120 at one point. And helped make oil one of the platform's largest single asset liquidation events outside of Bitcoin and ETH. So Hyperliquid really proving itself to be the best place in the world to speculate on these markets when the traditional markets are closed. So that was, the first set of news. But when we had this come out just earlier this morning, this is the news that the G7 countries are considering a joint release of oil from reserves, potentially as much as 400 million barrels as oil prices are skyrocketing. So the details of that are that the release would be potentially coordinated by the International Energy Agency. It includes 3 G7 countries, including the US, have so far expressed support for the idea. G7 countries currently hold 1.2 billion barrels of oil in the reserves. And as soon as that news came out, oil started retracing quite significantly. I think, Ledge, if you're able to pull up the chart to get a live look at where we went down to, it was as high as 120. I think we went down as low as 108. So a pretty significant pullback on the news that maybe some of the supply issues would be worked through and might not be as concerning. So what we've got up here is the oil price now down to 103. So very, very large pullback, just basically showing how volatile the market is at the moment, and how one piece of news in either direction can really skew positioning at the moment because people are so on edge. So this is not a market for the faint-hearted. I think you could have done very well on the trade betting on oil up till now and got completely wrecked by this news, which, to be honest, does not look like it is confirmed or definitive in any way at the moment, from what I can tell. This one idea, and this is just an idea, right, shared from JH, saying that they expect the entire price drop from the SPR release to be completely erased within the next 48 hours. And the argument is, well, in a very, to simplify the argument, it is that, yes, you might be able to release some 300 to 400 million barrels over time, but that volume isn't hitting the market instantly. It takes a very long time. For example, after the US decided to release 180 million barrels from the SPR in 2022, the most they ever released in a single week was 8.4 million barrels in the week ending 2022. In the week ending the 4th of September, I think. So it's a very complicated process to get this oil out. It talks about it being stored in underground salt caverns. And just in essence, it's a difficult process. It's not straightforward. It's not like you can click a finger and have all this oil on the market where you need it to be. And I think the general point is, yes, you might have the oil, but getting it to where it needs to be is the issue. And so I was quite persuaded by this argument that, yes, there's a big retrace on this concept that, right, people are going to respond and release some of this oil that is strategically been hoarded for this specific purpose. However, I'm very open to the idea that this could be tough to plug the hole sufficiently because of how challenging it is to get it out and get it to where it needs to be at the moment. One interesting consequence of all of this, and then we'll discuss this in a moment, Ledge. One interesting consequence of all of this is this news I saw reported out of Bangladesh just a few hours ago. But it says, this is from Reuters, Bangladesh will close all universities from March the 9th, that is today, bringing forward the Eid holidays. Remember, it's Ramadan at the moment for Muslims around the world. Bringing forward the Eid holidays as part of emergency measures to conserve electricity and fuel amid a worsening energy crisis linked to the conflict in the Middle East. So I think everyone's worst fear here is, yes, oil is going up, but when you study oil and its history, which I've been trying to do a little bit over the weekend, trying to become an oil expert, although we appreciate we're not entirely, so it has incredible knock-on effects for all different kinds of industries. In fact, every industry is touched by it in some way. And so here you see a whole country saying, look, we've got to close all universities. We have to conserve electricity. We need to conserve fuel because we don't know how we're going to get the amounts that we need, and we need to start thinking about that right now. So the process of what people are calling just a kind of demand destruction is taking place, which will, of course, be perceived as bad for markets, I think. So my general takeaway here is that not only in this specific example as it articulated around Bangladesh, but you could see some more demand destruction here as people have to just stop what they are doing. And even if you think about Dubai, right, the Middle East, who have had all of these attacks happening over the last few days and weeks. What kind of demand destruction is going to take place there? It's going to be colossal. All of these expats entirely dependent on expats, and a lot of people have left, and a lot of the workers there are entirely reliant on the salaries paid for by the business with expats. A lot of those salaries are remitted to maybe more lower income earning countries. So who knows what the knock-on effects are there, even, and that's just one component. We've just talked about two components really. So personally, based on the news that's come out so far, I don't think that's particularly encouraging news from my side. But I'd be curious to hear your thoughts as well, because there's obviously a complicated situation, and I definitely have some thoughts on how to play this and how to position in the markets. But what do you think?
The knock-on effects of that are, as you said, they are super complex and they're quite massive. If we just take a look, for example, at the Nikkei, the Japanese index, it fell off a cliff today when it opened on Monday, and all prices were as high as they were. It was down almost 7%. It did recover a bit from that, but it is down significantly on the day. It's still down 5% on the day. So is the Euro Stock 600. The Euro Stock 600 is down almost 2% on the day. The futures for the S&P, for the Dow Jones, for the Nasdaq were down 2%. They did recover a bit to quote unquote only being down 1% after this piece of G7 news came out. And maybe that's the one thing that I want to have a bit more details to provide on this emergency meeting. So they did establish that reserve in 1974 after the Arab oil embargo. It has been used before. So as you said, it's a complex process. It's not like flicking a button and oil is flowing. Last time it has been used, or it was used, was in 2022 as a result of the war in Ukraine and Russia invading Ukraine. And to put it in perspective as to how big that reserve is, the IEA hold stocks that could nearly, and that's coming by the Financial Times, could cover nearly 1 month of total oil demand in the IEA countries, and over 140 days of net imports is what they're saying. Trump also had something to say on that on Truth Social. He said short-term oil prices, which will drop rapidly when the destruction of the Iran nuclear threat is over, is a very small price to pay for USA and world safety and peace. And also added that in caps lock, only fools would think differently. But nonetheless, the global stock markets are reacting to that in a very, very sensitive way, especially in Eastern Asia.
So Asia opened down, right?
6% for Japan, for example. Yeah.
6% down. How did South Korea do? Obviously, South Korea was getting slammed last week. I think 2 days in a row they had the circuit breaker. Was that a similar situation today as well?
Let me find that chart for the Kospi index. Yeah, it's down another 6% on the day.
I mean, yeah, market's getting hit really, really hard here. I think Europe opened down as well, a few percent. Okay. So yeah, I mean, I don't like this setup at all. Obviously, I think a lot of people are concerned as well. But maybe my thinking, let me articulate my thinking, because I think my thinking is maybe different to what other people are saying in media and other analysts. So my thinking is you have to know what you're good at, and you have to know, I think you have to have a sense of the trajectory of things. Obviously, we have been de-risking from the summer of 2025. That puts us in a nice position. But I think one of the concepts I felt instinctively during that course of time was the concept of just getting out of the way. And I was talking about getting out of the way in respect of Jeff at Hyperliquid fighting with CZ at Binance, with Asta, these two titans going head to head in competition for the best perp decks in crypto. That was a real fight. And I think that was actually part, I mean, it wasn't specifically the only reason why the crypto market crashed, but it was a fight taking place. And I just thought there will be collateral damage from this in the same way that multiple years before CZ going against SPF from FTX created, I mean, that one maybe more so, instigated the, or was responsible for, or at least in part responsible for the collapse of FTX, the biggest crypto, well, one of the biggest crypto exchanges at that time. Putting aside the fact there was all kinds of crime involved as well, which is not acceptable. And so here, I just think it's really important sometimes to know when to get out of the way. And so whilst we've been getting out of the way when we saw a lot of stupid things happening in 2025, that's put us in a strong position this year to be defensive. I just think you don't want to risk all of that good work. Say you did take a bunch off the table in 2025. You're feeling good about yourself for that reason. The only calls that I'm seeing people make at the moment are incredibly short-term calls. Someone asked me the other day in the Telegram, which I still think is great as part of the ongoing conversation, but someone asked if I owned any wheat or something. It's like, guys, what are we talking about here? I don't know the first thing about wheat. I don't know anything about wheat. And now I know we say on the show, we're going to go to where the bull markets are. There's always a bull market somewhere. We're going to try and, get exposure to the things which are going to go up. That's what we want to do. But I've never more felt, and again, I've only been doing this maybe 4 or 5 years now, I've never more felt that, I don't know, it seems like everyone in crypto is the last at the party at the moment. When crypto got involved with metals, that kind of started to form this toppish behavior. When crypto is getting involved in oil, just on the weekend on Hyperliquid, we've just seen this retracement. Now, I don't actually think that one is permanent, but let's see. As soon as, remember, we spoke ledge, South Korean stocks are now available on Lighter. South Korean stocks are available on Hyperliquid. That literally marked the top for South Korean stocks. If they put wheat on Hyperliquid, I am not going to trade wheat unless I'm going to short it, I think, because I think that there's a trade there. But my point is, all of these trades, ideas that people are coming up with, or that I hear people talking about, the time frame has compressed so much that people are suggesting, okay, well, maybe this is a buy and sell, this month or this week. And there's news that's coming out so quickly and so routinely that changes the whole investment thesis or the perspective. The world's changing too fast at the moment. It's so unpredictable that I just really think that if you're in a position that you've got something to protect, you've got to protect. It could be as long as this year. This year could be a year for protection. And so what am I doing? So I had added some gold last week or the week before. It moved up and that's retraced. I am kind of persuaded by the idea that gold, whilst I'm still bullish long term, I might have too much at the moment and I might need to rebalance a little bit, because on the short term horizon, I saw the announcement that Poland were thinking of reducing the amount of gold, because the specific reason is they might need to finance more defense spending. And I can see a lot of people in that situation. You can definitely see people around the world looking at what is going on in the world right now and thinking, I need to spend more on defense. What you've realized is if you don't have a nuclear, I mean, one of the more concerning things, I think, is what the Iran tells you, is that if you don't have a nuke, then you will get taken over if if people decide that you are now no longer on a list of countries that are likable anymore. I think the rest of the Middle East countries will be looking around saying, okay, well, even if we didn't like the administration there, maybe they feel more vulnerable, because on the whims of Israel and America, you can be attacked if they decide they need to change your regime for whatever strategic objectives. So I think a lot of people will be looking around feeling more vulnerable. We've already heard European leaders say that they need to increase the spending on defense. So could that affect gold? I think so, potentially. And then more generally, I guess the takeaway has been I opened a short, not on the S&P this time. I just went short Nvidia, which I guess maybe is a proxy for shorting the S&P. I think I did that on Friday, as just one alternative way to express, a little bit of bearishness here. But then aside from that, still like these are with small amounts of the portfolio. I'm not betting the house on anything, frankly, at the moment. I'm trying to protect. I'm trying to keep a big stablecoin balance, with a big, just cash balance, whether that's in stables or anywhere else, and think what to do with that after. But Ledge, that's me and my advocating for protection mode. What do you think?
I like it. It resonates what I said end of last week, that sometimes the more valuable thing is to know when not to trade and when not to do things. And I feel like I am in this situation. Like the obvious trade probably would have been just buy oil when this war broke out. Now, and even after Friday, when oil was up 9% on Friday, today, even today would have been an excellent day to buy oil. But it is so unpredictable what is going on and how this will escalate, or when the escalation will stop, that I'm just not an oil trader, man. Like, not a geopolitical expert. Obviously, you're reporting on that best of our knowledge, but I don't feel comfy to trade this with a significant portfolio size. Now, there's people out there hunting. Okay, if oil is up, what oil companies now have the best PE ratio? Which maybe you don't want to buy the big ones, don't want to buy the Chevrons, but are there smaller ones to like hunt down? Similarly, people were hunting down silver mines when silver was pumping.
Exactly. Yeah.
Some of which made a ton of money, some of which lost a ton of money doing that. But I'm not an expert on that, so I'm not an oil buyer. I'm not an oil gold shorter here. I'm not interested in buying wheat. Yes, I know wheat is up 20% over the last month, but I'm not an expert in the like international supply and demand and structure of how wheat is imported and exported throughout the world. And I think that some of these like trends are so short lived that it's, from my personal perspective, it's not worth it becoming that. And obviously, if you, I'm not saying it's not a worthwhile endeavor. It's just not one for me. Interesting thing is, if you remember a couple, I don't know, months ago when we're speaking about volumes on Trade XYZ, silver used to dominate, and we did see days with um, billions, 2, 3 bill in daily silver trading volume. And silver is still doing quite well. It's still like the second most traded asset on Trade XYZ with 360 mil. But ultimately, if we had days with 3 billion, like this is down 90%. And now the thing everyone's trading is obviously is oil with 1 billion in volume. If you add Brent to it, then it's 1.2 almost billion volume. So it does seem that like Trade XYZ and maybe Ostium to a similar extent as well are becoming the places where you're trading the like hot new asset. It's not a new asset, but like the hot asset that the world is talking about for whatever reason. Whereas like the more traditional things, like the Nvidia stock, the Robinhood, Circle, like they are struggling, man. They're not getting off the ground. Nobody, it's 15 mil for Circle, 9 mil for Hood. Nobody really wants to seriously trade stocks on chain on Trade XYZ, but people do want to trade the hottest commodity asset, whatever is making the media now, whether it's silver pumping, whether it was natural gas, or whether now it is oil pumping.
Yeah. I I like that analysis. I would only argue with maybe the middle to last point, which is that I think people do want to trade the stocks. I don't think they do, but I know what you mean. The clear use case is the hottest thing. Whatever is the hottest thing. If the hottest thing for whatever reason became Google, then yes, people will want to trade Google. If the hottest thing became Circle, then yes. I'm sure, for example, when Circle went from 50 to 100, it might have been higher up in that list, you know? Um, I mean, arguably, one thing that this is a takeaway, or two more thoughts on this. Everything's coming on chain. And so the question you need to ask yourself as an investor is, does the fact that everything is coming on chain mean that I'm going to invest in everything? if you think about why you came into crypto, and I'm assuming our audience is still majority kind of crypto focused or crypto adjacent, are you able to, if crypto had never existed, would you have invested in everything? The answer, I think, would be no. You still stick to what you know best. So just because you're in crypto and now everything comes on chain, it doesn't mean that you need to trade all the things that come on chain. So I think being really, really selective and thinking through what you actually want to trade after you've developed a bit more of a thesis, that is the core thing. I would say though, Ledge, if you're thinking about cycles and you're thinking about where trading in the most trading the most liquid thing, trading where all the attention is. In 2021, it was NFTs. In 2020, I can't remember, 2022, 2023, it was Sol. Then it was meme coins. You do have to follow the capital. I think what we are learning in the last few months is the capital will keep moving, but it will be whatever is hottest on HIP3. I think there will be no more meme coins, as in obviously people will launch them, but the meme coin era is dead. You just got to follow liquidity. Liquidity is telling you now, if you just scroll up, let's to go to the top, so it's clearly oil right now.
Yeah.
If we can get this on the screen, you know, oil has done $1 billion of volume on HIP3 in the last, I guess this is 24-hour volume, Ledge.
Yep.
Yeah. So, if you're using that same concept, that's the thing to trade. Now, I realize I am contradicting myself in the sense that on the one hand saying don't trade things you don't know, but equally saying, well, this is the thing you're going to do if you want to take the risk on a very short-term time frame. So for me, these things are short-term trades in the exact same way that you would take a meme coin trade and you do it short. So it's going to sound strange, but I think the meme coin trading activity style of trading is now in these assets where as soon as they come online, they're going to have the most volume. If you want to make money, sure, the volatility is there. So that is where you take your short-term bet. But just know specifically what kind of trade it is, which is that it is short-term. And then you've got to maybe think elsewhere for your longer-term positioning. Does that make sense, Ledge? This kind of meme coin analogy, although
I'll extend it a bit because there's one specific point where I want to push back. I feel like trading on HIP3, if you want to trade the hottest asset, is like trading a meme coin after it has been listed on Coinbase or Binance. Like you're quite late to the party and you want to trade the meme coin ideally in the trenches. You want to be on your Photon app or whatever, and you want to get the runner before it did run to an amount that Binance found it interesting or Coinbase found interesting. And if you look at HIP3 markets, obviously they are gonna grow and these things will remain listed. But once it's listed, you're pretty late to that. Not saying that you can't squeeze more profit out of that, but the ideal time to buy gold and silver was way before they were on HIP3. And even with, you said wheat as an example, like if they're going to list wheat at some point here, you got to know that it's already up 20% on the month and it's up even more year to date. So follow the liquidity, but it's not as simple as looking at volumes on Trade XYZ and just hitting the buy button, because a ton of people hit the buy button before these things even were listed on Trade XYZ.
Yeah, but interestingly, then it could be that it could be the case depending on the asset. And my argument with you there would be, well, oil has been on, so you could have captured this whole move on oil because oil was listed before. Maybe it was just kind of mixing around for a while. I don't know exactly the date when oil was listed, but oil has been there. So it wasn't one of those examples where, oh gosh, it's too late to catch the whole move, because the whole move has been captured on Hyperliquid, which is interesting. Your point about wheat, I agree with, but it might be the case. Yeah, you don't necessarily bid when you see it. You might get it might be listed on Hyperliquid, so like you've got a short. I don't know.
Well, the universe will grow, and they won't delist, right? They won't delist oil after the world moved on. So then, when it pumps the second time, and volume picks up, the asset already will be there from the get-go, and that was the case for oil. Even if gold crashes to 3K and then it runs, I don't know, in 2 years from now, which is not what I'm thinking, I'm just making up an example, then gold will be listed. So for like completely net new assets which hadn't been listing before, which just get listed, you are late. For things that have been on and already exist, yes, you can track the volume. I think maybe that's the distinction you want.
Yeah. And look, all of this makes me think, because yeah, eventually everything will be here. And so eventually it won't be the case that you even have to worry, oh, when they list it, will that be the top or whatever? Because just everything will be here. So you got to be imagining into the future, right? We talk about investing, thinking 18 months ahead rather than thinking about right now. Right now, yes, I get it. You have this conversation of like, okay, are we at the top because they've listed it? Maybe it's not a great time to buy, but eventually everything will be there. And so in that world, you have, things going up and down based on legitimate analysis and whatever's going on in the world. And so I wonder whether just the best way to express seeing this activity continue is just hype as a token. And so hype at $31 now, I think it might be 31 or 32, could just be a very nice way to, if you don't want to get involved in trying to catch wheat, or if you don't want to get involved with, oh no, oil ran from 870, I can't remember even the number, 80 to 120, now it's back 100. Do I need to long or short oil? When you know very well that you're not an oil expert, all that you do know as a non-expert is that a lot of this activity and interest took place on Hyperliquid. Has the rest of the world switched onto that? Do they have any competitors for this type of after hours market? That is the question you'd be asking yourself. If the answer to that is no, or even if the answer to that is yes, but you think that this is a better destination for this type of activity, a better product, then maybe the cleanest way to express it is just hype. And at 30, 31, it's not as low as 22, not as good as 22, not as good as $25 entry, but certainly not the worst, given that it ran up to 50, 60 on the spike up, was definitely at around 40, 45 for a long period of time. I'm kind of open to the idea that hype would just be the cleanest and best way to express this ledge. What do you think?
I don't know. I think
you just want to be risk off at the moment. You just don't want to get involved in the fight at all.
No, it's not that. I think hype is a great platform. It's great to like be bullish on it, but ultimately hype hasn't done a lot over the last months. Like at the same time, we're speaking about oil being up 70%.
Well, it went up 50% from the lows.
Sure, but it's like still down 50% from wherever it has been. So
yes,
like if you buy right now and it does what? It pumps to 40, then you made 20-ish%, okay, 30-ish% on it. At the same time, if you do that, it's a good bet. Maybe this is my point. It's a good bet, and I agree with you, but it's not a replacement bet for like, I don't know, having bought oil a month ago or having bought oil even last week. Like hype is up. How much is hype up over the week? Hype is up 2% over the week, and oil is up just 20% on the day, more over the weekend, more or less. So you're not really getting that performance of the great assets people trade on HIP3 blowing through.
Yeah, comparing different things though, right? Like, yeah, you're not going to get the gains of the best assets at any moment, because it's an unfair comparison, I think. But
yeah, so that's why I think it's not a good replacement thing for me to be like, oh, I'm just gonna stay spot off, but everyone's trading on Hyperliquid, so this is what I'm gonna buy Hyperliquid. Like that would not be my logical conclusion as a result of that.
Yeah. Okay. Well, I think the world in which we're envisioning this is that if you're not going to trade the more volatile stuff and you want something to trade, then that would be a nice extension, because you can't compare the gains of something that we're not trading. If we're saying you're not going to trade the oil, then can't compare it with those gains, because you're not going to get the gains because you're not going to trade it. But
and I'd rather still buy the S&P 500 or a global stock market index as
S&P.
So
yeah, so that's what I was kind of pushing you, trying to be like, okay, well, where do you express it at the moment? So I think you're kind of still in the mode where maybe even more protective S&P index. You still got your kind of plan going on where you just average into the S&P. Well, whether it's the S&P or the European weighted version of the indexes. So yeah, okay.
Yeah, because things
Good call.
take each other out, right? I mean, my MSCI World is not doing a ton here because on the
Yeah.
one hand, you will have companies like Chevron, which are up 25% over year to date. You will have companies which are down. So overall, it's holding up pretty well. So if you want to be risk off and just do what the stock market does, I'd rather do this than buy hyper liquid.
Fair enough. And now people have the option to do that, right? Because a lot of this stuff is even on chain, but also we're talking about off chain holdings as well. Interesting conversation. I'm glad we kind of got into explored some of the options available at the moment. I'll share one other final thought as we close out here. We're not going to do the other two headlines. I feel like we've spoken about everything that is super meaningful
Maybe
today
before you
anyway.
share the final thought, let's quickly throw it to Funky, who has been waiting with
Oh,
his hand up, and then close the shot on your final note. But Funky,
let's do it.
you.
Funky, welcome to the stage, man.
GM guys, no, what you were saying, B, the recent Arthur Hayes essay just dropped this morning called Hype Man, and he basically outlines that exact thesis, that when you look at the open interest being captured by the 24/7 markets that HIP3 has created, in conjunction with the fact that HIP4 is going to do the same thing with prediction markets, it is extremely undervalued. It has a PE of roughly 12, and he lines that up to things like Coinbase or Robinhood, which have PEs closer to 40. And he says, if you look, granted, this is just one data point, but as a proxy, GMX, which was very similar to capturing all of the perp volume during the bear market in 2023 when there wasn't much going on, it absolutely just went bonkers. And a lot of the token value was being driven back to the token owners. So he's speculating that this could, if it continues these numbers and it gets back to its previous all-time high in terms of how much money is being bought on, the fees are going toward the buybacks and everything else, he could see hype running to 5x to $150. It's obviously that's the short version of the long essay that I read through this morning, but it's spot on to what you were saying earlier, B.
Well, appreciate the additional information there, Funk. Definitely always kind of keep an eye out on what Arthur Hayes is saying, although we strong caveat here that he's come out with some outrageous calls recently and then sometimes does the exact opposite very, very shortly after. So I think that is relevant also to point out, although, he kind of makes calls and then is not beholden to them by any means. So yeah, definitely worth pointing that out. Although I'm sure it'd be interesting to have a read of the piece anyway. Final thought, maybe to close out. I shared this in our Telegram chat earlier today as a general perspective on the market. I said this. I said, I've been thinking about this more broadly. You don't need to hit the home run on every rotation. This is my first cycle as an investor during a global conflict, and I'm defensive, and I'm taking notes. Should I have caught oil? Not really. I've never seen that before in my investing career. Now I have. So now I know for next time, whether that's in 5 or 10 years or 20 years time, my instinct for the year is defensive, and we earn that by risking off throughout the main year of 2025 from the summer. So I think this is the model that I'm thinking about a lot. I think this year is a year for being defensive. I think that's fine. I think, yes, you try and take on whatever trades you feel, if you feel like you find a nice spot in something. But in general, this defensive outlook paired with maybe a mentality that's more like, look, I'm learning what oil does in a global conflict this time around because I'm not an oil trader. And now I know for next time, because this stuff repeats over history, right? I've seen already some posts on X talking about how things have responded in years gone by. This is all part of experience. It's all part of learning. It's all part of building up the toolbox and understanding how certain circumstances affect other things. And so we're just kind of on that journey. And that's where I kind of shake out on it. Ledge, what do you think as we close out here?
I think that's a fantastic point, and that's the point I can fully agree with. Like, we are not oil traders because, as you said, we haven't had the capital and the interest years ago to trade the Russia invasion or to trade things that happened way earlier. If financial crisis were to come, the last one, 2008, we were like way too young to trade that in a meaningful way. So that is, I think, the right mindset to like learn from these things and like not beat yourself up. I'm not beating myself up on not having bought oil a week ago. Obviously, it looks so simple in hindsight, but looking forward and learning, because patterns will repeat and things will come back. Like all of these things are not new for other people. You mentioned the G7 coming together and discussing to release oil reserves. I had no idea these oil reserves existed because it was not something I've been tracking. And I'm like, oh, okay, this is a thing that has existed since the 70s. And I think they released them 4 or 5 times over that period of time, as I said last time in 2022. But looking forward, now I know there is a thing like that. And now I know that's a data point or a key point to keep attention to. So I like that forward-looking perspective.
There we go. Stay learning, stay inquisitive, stay curious, don't beat yourself up. All of this is tuition. We're learning and we're getting better over the years. We are definitely getting better over the years. It's been a strong run for us since 2021, and long may it continue. Hope to bring you on that journey with us. Hope you're learning with us as well. Guys, that's our show for today. Just a reminder, we do this every single day, Monday to Friday, 7 a.m. Eastern time, live on X video, YouTube, and you can catch us on Apple and Spotify podcast as well. We will be back same time, same place tomorrow. Got some cool interviews lined up this week as well. So we'll get to those in the next few days. Hope you have a wonderful day. Take care. We'll see you tomorrow. Bye-bye.